All right, this is the Kickoff webinar from followmetrades.com where we're rolling out our new Advanced Traders Club. Super excited about this. We've been talking about it for several months. I've been working with Mark, and you're going to meet Mark here in a minute. Really good trader, smart guy. And we just really wanted to get it right, get the trading algorithms and the technology and the alerts and the signals all working really well, and we got there. So now we're ready to roll this thing out, and this is it. All right, before we get started, of course, a reminder that all trading and investing involves risk. I'm not a financial advisor, and I'm not giving financial advice, and risk control should be used in any trading at all times. And for those that decide to sign up for this service, we're going to offer some training tomorrow, kickoff training, and we'll walk through our approach to risk management specifically for this service. So the Advanced Traders Club, I say it's active trading for advanced traders. So this is not good for beginners. I'm going to walk through a checklist here to help you, kind of decide if this is a good fit for you. But it's going to include day trade signals. We're going to show that. It's going to include earnings trades and then unusual situation trades. These are all bundled into this service called the Advanced Traders Club. So day trading is new thing we're just rolling out. We've been doing earnings trades for over a year, and that's a pretty mature process. We've learned a lot, refined it, and what we're doing is just rolling that into this bundle called the Advanced Traders Club. So if you're an existing earnings trade subscriber, you're just going to get upgraded, get new stuff at no additional cost. And if you're just going to join this service, you're going to get access to the earnings trades. And then unusual situation trades, we've done that periodically, published unusual trades. There's always something, right? There's a pandemic, a presidential election, economic decision, a stimulus package, a hurricane, whatever, right? There's things that cause the market to move, and that can present unusual opportunities. And we've got some strategies and trades to take advantage of that. And we've done that over time. So that's all included. We're going into some details on each of these right now. Okay, but first let's see, is this a good fit for you? And, it's not for everyone. And that's cool. And I just don't want to position it and have people maybe who don't have the right, that haven't achieved the skills yet to jump in here. And, the last thing we want is people to make mistakes and lose money. We do talk about risk control, but you have to understand it. And you have to understand how to place and manage orders. So, hey, if you're looking for some action in your trading more than, our standard stock and option pick service, then yeah, because we're going to have a little bit more action in the Advanced Traders Club. If you are comfortable with your trading platform and with placing and managing a variety of order types, that's important. You got to be fairly fluid and proficient at placing and managing orders. And if you are able to structure bracket or OCO type orders in your platform, that's going to be an advantage too. If you understand options and you're comfortable trading options, that's important because virtually all of the advanced trades are based on options. Yes, if you can take signals and guidelines and apply them in your trading using your judgment and experience. Trading is sophisticated. All trading is sophisticated. There are nuances to it, and we give some guidelines, some training about how we do it. But we just cannot provide black and white clarity on every nuanced circumstance you're going to encounter. So you need to be able to use some judgment and apply your experience in advanced trading. If you want to participate in some exciting trading with exciting profit potential, then that would qualify you. And if you understand and you have embraced risk management and you understand that trading is a numbers game, that there will be losing trades, right? All trading, whether it's advanced trading or more simple trading, is a numbers game, right? It's how many trades do you win? What's your risk control? What's your payout ratio? That's the key to successful trading, regardless of the time frame you're trading. All right, maybe not be a good fit if you're new and you're just not comfortable with your trading platform and placing and managing orders. It just might not be a good fit at this time. That's okay. If you cannot tolerate some degree of autonomy and ambiguity, it's probably not a good fit. We're going to provide solid instructions, but again, we cannot give every nuanced occurrence and situation. You're going to have to be able to apply some experience and judgment. So that may may be not a good fit for you. If you're a bit of a cowboy and you like to take big risks, this is not going to be a good fit for you, because our approach is all based on measured, controlled risk management, and taking a fixed amount on every trade and understanding that, 30-40% are going to lose. You're going to have some winners. The winners are bigger, right? But if you start betting the farm on 1 or 2 trades, you can lose the farm, and that's just not a good deal. All right, if you're really new and maybe you say, no, I'm not really comfortable with my trading platform, placing orders, but you really want to jump in here and learn, then you may find it helpful, but we would strongly suggest that you start off placing your trades in simulated account with demo account with paper money. Practice with paper money, and establish competence and confidence. Don't learn with real money and lose money while you're doing that. There's no reason for that. All right, so with that all said, 3 categories in the Advanced Traders Club: day trades, earning trades, unusual situation trades. So the day trades, and this is the new thing. So we have created, Mark, right? Mark did 90% of the work. I offered some input and feedback and testing with him.
But I'm the techno geek and you are the expert. So we meld that together.
Yeah. So we created a proprietary system that identifies some day trade opportunities. It's got a back-tested accuracy of 80% for short-term moves. Now what that says is, if the signal said, go long, the thing's going up, 80% of the time it did go up. Trying to back test how far it went up, for how long, really difficult. But but in the short term, in terms of day trading and scalping, right, we are confident that the algorithms that we've got here, right, if it says it's going up, there's an 80% chance it's going up in the short term for at least a scalp. And same thing for a down. A down signal, there's an 80% accuracy that it will go down, at least good enough for a scalp. We scanned the whole market and identified stocks and ETFs that were good day trading candidates. So not all stocks are good day trading candidates. And, what qualified them for us was, hey, they got to be high volatility, but also manageable volatility and not gappers, right? Constant gappers. They got to have high liquidity. They got to, trade millions of shares. They got to have a deep and active options market, because we're going to trade these with options. And we found ideally doing day trading, the weekly options are the best. So they got to have weekly options available. They have typically tight bid-ask spreads. And there's about 90 candidates that kind of fit that criteria that we scan through. And that's a fluid list as things come in and off. But we start looking at about 90 symbols that meet this basic criteria. And then we have a unique proprietary algorithms to generate day trading signals from that list. And we're using, these are some standard indicators that, if you just go Google, searches on what are people doing for day trading, right? Everything we're doing is based off a 2-minute chart, which is a really good intraday time frame. But we're using the Chaikin Money Flow Oscillator, CCI, Williams percent R, PFE, volume weighted MACD, RSI, SMA crossovers, weighted 21 period average, and a few more. And then Mark has actually written some custom indicators that accumulate or aggregate some of these signals. And so what we're looking for, right, we combine all these, we use some proprietary weighting to them, we do some filtering, and we generate signals for day trades, right? So when something qualifies, there's a signal that comes out, right? Those signals are based on either a reversal of a big trend or a retracement of a large trend or a continuation, right? So you had a big trend and it's reversing and going to retrace, or you had a big trend and now there's a continuation expected, and the signals are establishing that, right? When that trade criteria is met, and this is where Mark has been super helpful, because he's a good trader and he's really a learner. We've been working together, I think, close to 2 years now. We started putting together the earnings trades, and now we worked on the day trade signals. We've done the unusual stuff. And he's a really good, solid trader, and he's evolved and learned just like we all do. And he's also an engineer, so he brings that engineer's discipline to trading about, hey, we gotta have a formula, we gotta be consistent, right? We gotta follow the math. And he's a pretty darn good coder, so he's able to write code to take signals from Thinkorswim through the API, take it into a spreadsheet, run algorithms, and then trigger back an API out to our custom app to do alerts. And that stuff happens fast. All right. So when a signal comes out, it's going to include a timestamp, the trading signal, which option contract, and the trade direction. Okay. Well, we've been sitting here this morning, right? So that the signals come to a app that we've developed. A lot of you are existing subscribers. You already are in the app for the normal swing trading signals, so you know how that works. I'll show a web version of it here. It really works best on a phone, but you can see 4 minutes ago there was a signal that came out, and you got a timestamp here, Eastern time, right? Minute and second. It said, hey, day trade, YZS at the money, December 18th expiration put. So that's that's going down. That's a short trade that came out about 4 minutes ago. I have no idea how that's doing. Before that, it was Zoom. We got a timestamp, said, at the money, December 18th, call. So Zoom's going up. All right. That was the prediction 18 minutes ago. And then 3 minutes ago was ZS. And you see they've been tripping out here all morning. So that's kind of what they look like. And again, you can install the app, iPhone or Android, on your phone, and you will get an alert when there's a new trade signal. Okay. And Mark is correcting my pronunciation, Jakin. I thought I said Jakin. Did I say Jakin? Sorry. All right. So Mark Monfray, do you have that spreadsheet? I forgot to ask you ahead of time if you had that on the computer. Your Zoom.
I will have to viewer into it because it's a dedicated machine. It's not the machine that I run on. I'll see if I can bring it up here.
Yeah. See. If you can't, it's no big deal. Let me press on. If you're able to without scrambling, all right, that'd be cool for people to see the spreadsheet, just how sophisticated it is, right? So we send real-time trading signals when the criteria is met. They're sent to the to people who subscribe via our custom app. It's available on iPhone and Android. There's a web-based platform that I just showed. Training materials are provided to subscribers. We give the guidelines for interpreting, responding to the alerts. That includes order placement, suggested bracket order structure, trade management, exit criteria. And we're going to have a kickoff webinar tomorrow. So anybody that signs up today, then tomorrow, same time, 9 o'clock Pacific, noon Eastern, we will then have a detailed training session where we walk through the alerts and the orders and management and all that stuff. We'll record that session. We'll have a PDF that's posted that you can access later, right? So we do provide our guidelines. Again, you have to be able to interpret that information, and you have to, tolerate some degree of ambiguity. All right, Mark is sharing the spreadsheet. All right, you want to take a minute, Mark, and explain what we're looking at?
Certainly. So we do a daily scan. We look for the most active options that were traded on today. So near the close today, I'll do a scan, see what the actively traded equities are out there that have sufficient volume in the options world, because we're trading options to be able to do that. That scan then becomes the list for tomorrow's trading. And then we put it in here, match up the information we're getting real time from the web as to what's going on with price action and all of that. And then it monitors all of these different triggers. And then you'll see the column W right there will tell you when it's going to trigger something. And then what the trend is going to be as far as which way it's going to go. And it sends out, which it just did, an alert.
Yeah, so you can see we just triggered which one?
Etsy and the SPY.
Okay. Oh, the SPY triggered, huh? And yeah, let me share again real quick. So you see real time, Mark's got an API from Thinkorswim that's actually generating the indicator data that he's applying algorithms and filters in the spreadsheet. And when it's triggered, it's going to send an alert, and you can see you watched it happen real time. There's the Etsy trade that came out at 12:16 Eastern, and that is going down. And here's the SPY, and that's going up, right? Now we're always doing weekly options. So we're always going to say at the money, you know, the December 18th is this Friday's expiration. On Thursday, it will roll to next Friday, right? So we're doing Monday through Wednesday, we're doing this Friday, and then Thursday, Friday, we do next Friday. If that makes sense. So those, you know, those will come out really fast, really real time. That's very stable. The technology is good, assuming the internet's up and all that kind of stuff. Okay, so that's the day trade alerts, and this is new. The average is going to be about 10 to 30. It depends on the volatility of the market. Could be more, could be less. Probably not less. We haven't seen less, but there could be more. And there's a note about that. You can see we are, you know, when you saw Mark's spreadsheet, it's everything from Amazon to, you know, a $5 stock. I think our bottom threshold mark is 10 or 20.
$20 is the
$20.
minimum underlying equity.
Okay. So, and the reason is there's going to be more signals than you can take as an individual trader. And some of them, you know, Amazon, you're going to be paying $6-7 grand for a single contract. And we suggest, and we'll cover this in the training, but we suggest using a fixed trade amount for each size, and probably 1 to 2% of your account is a really good starting point. So if you got a $50,000 account, taking a $500 to $1,000 trade, fixed trade size is probably the right thing. And so if you're going to do a fixed trade account amount and a $50,000 account of $1,000, right? If you got contracts at 200 piece, that's great. You're going to buy 5. If you got Amazon at $6 grand, you're not going to buy it. You're just going to let it go. So that's kind of how it works. And Casey is asking, did I say it's up to the trader to determine where to take profit? So we have some guidelines and some OCO order templates, if you will, to start with. And, you know, the basic structure is an 18% drawdown, you know, on a fixed trade size, and then a 40% target. So we don't move the 18% stop. If it starts going the wrong way and it hits that stop, you just close it, you lose 18%, which of, you know, 18% of 1 or 2% of your account's a very small tolerable loss. And then if it heads up, starts running, we can push the target, and then we suggest a trailing stop. So it's going to go up with the price, starts at 18%, it's going to trail up. And then as it runs and maybe you move the upper target because the thing's really moving and it's in nice, we'll tighten that trailing stop up to then 15, 10, 5% and try to lock it in at the next reversal. So we got some guidelines, but again, it's up to you. We're expecting that you're an experienced trader, you're disciplined, and you're going to maybe apply your own touch to that. And you do have to adjust even that suggested starting bracket order. So I hope that all made sense. And Casey says, nice, good. And so Mark has the screen, and something you wanted to say there, Mark?
Yeah, so, I mean, this is what I've got on from the signals that are out there right now. I'm in $83.50 of profit on the day trades. You can see that profit and loss open, made 48 bucks on Boeing on one of the signals this morning, lost $69 on Disney on one of the signals, up 105 in Facebook currently, up 137.50 in laser, down a little bit in mRNA, down a little bit in Stitch Fix, and I did just take that SPY trade when it came up, and right now it's just floating around the break-even point. What I just did is I tightened up laser's in profit, so I just tightened up my stop on laser, and that's how you manage it, is that I went from an 18. I always start with an 18%. The way I do it is an 18% loss, so I do a stop loss at 18%, and I have a profit target of 40%. So this is the OCO order on the laser. And so what happened is it had run up. So what I want to do is tighten my stop to get myself to almost a break-even spot. And I am, let me do this. I can look and say my trade was at $1.20 and my stop is at $1.45. So I have gotten myself up to a point in which this trade should not lose money.
That's the catbird seat. And again, we're going to, for those who sign up, we're going to walk through a training session tomorrow and provide some documentation so that you can kind of replicate this. And again, you're probably going to add your own criteria as well, but it's a good starting point in terms of our order entry, order management, trade management. So that is the day trade stuff. Now, again, that's new. We've been doing earnings trading for over a year. And so that's going to be included in this bundle, right? Earnings trades. Earning announcements can cause large movements in the price of an equity. And we've created a system that identifies earnings trading opportunities. We keep track of everything. It's a ton of work. We analyze data from a bunch of sources, process it through algorithms, filters to find great trading earnings trade candidates. And there's two criteria for a good earnings trade. First, you got a potential big move coming, and then you got to have advantageous price in the options, right? Sometimes it's already priced in and there's nothing to make there. Casey's asking, is it straight calls or puts? I think that was back to earnings. Yeah, the earnings, or not, sorry, the day trade. We found the lowest risk, highest profit, just to take the calls, take the puts based on the directional signal. Right. Your money, you can do whatever you want. You could do spreads, you could do butterflies. It's moving pretty fast. It may be hard to set those up, right? The highest reward to risk on this is straight calls or puts on the direction. Right?
And it's easy in, easy out with a straight call or put. If you start playing with spreads and things like that, trying to get a good price to exit is going to be difficult, or you could easily be wicked out on something.
Yeah. So earnings, and we've been doing this for over a year. And earnings is a numbers game, and actually your win ratio on earnings doesn't have to be that high, right? It can be 20, 30% win, and you can be pretty profitable. Here's Stitch Fix. So we sent an earnings signal on Stitch Fix last week here, right? And this is exactly what we're looking for. Mark calls it a coiled spring, right? Had signals that there was going to be a big move. We didn't know which way, so we just take a straddle or a strangle on it, right? It popped 30% and then ran another 30, right? Stitch Fix has nearly doubled from pre-earnings in less than a week, right? And, if you took a straddle strangle on that thing, one side went effectively to zero, but the other went 4 or 5x, and you made money. So that's the kind of trade we're looking for. We did Kohl's last week as well. Right? We're showing the best ones, of course. Some of them go nowhere. You lose a little, you close the trade. Remember, you only need to win 20, 30% of these to be pretty profitable. So Kohl's had a huge gap, ran up, right? That was another profitable trade. So,
and then I put a trailing, and I put a trailing stop on Kohl's because it had gone into the money, and I got stopped out, but for profitable trade.
For a win, right? That's what you want. And we've got documentation on how to place and manage the earnings trades, and you get access to that. Most common in the earnings trade, straddle strangle, right? You're just buying a call and a put, either right at the money, or depends on where the strikes are. It's either a straddle strangle. You're just taking a position on both sides. You need a big move. One side loses, one side wins really big. Sometimes we'll do a butterfly, balanced or unbalanced, sometimes a calendar spread, vertical spread. We try to keep it simple. And sometimes our indicators will give us a directional edge, and we'll just go straight calls or straight puts on an earnings trade. So that's kind of how the earnings thing works. And we post the earnings trades on a members only webpage. You get access to it. We give the exact option strategy, timing, contracts, price guidelines for the trades. Don't pay any more than. If there's going to be trades for the day, we'll send an alert via the app, so you can go look at the website for details. In the peak of earnings season, it's going to be pretty busy. And then, earnings season runs in cycles. There's a lull. And, for 2-3 weeks between cycles, there may be 0 trades, but then it gets exciting at the peak. And we got training materials, which give all the guidelines for that. So that's good stuff. And then the final category here is unusual trades. And these are just, Mark and I talk probably, 2-3 times a week. And one of us will go, we got this, they're going to vote on the stimulus package this weekend, and gosh, the Spire, the Qs, if something big happens, there's going to be a big jump. What should we do Friday at the close? Right? Can you take a position with really low risk, little bit of capital, and if things really pop Monday morning, you could get a big win. So, and we've done, for the election and after the coronavirus crash, we've done a series of unusual trades that we set to people, and they've worked out really well, really well. So, as a member of the Advanced Trading Club, when we get unusual trade ideas, you will have access to those. They'll come out in an alert. All the exact criteria will be there. Let me see, got a question from Terry. Will the timing of the earnings be about the same as we did yeah. So the trades are typically placed an hour before the market close. So we get the trade candidates posted before that, get an alert out. Yeah, Mark replied to that, yeah. Okay, good. Anything else on unusual trades? When we identify a trade, an unusual trade opportunity, then we apply the most appropriate option strategy for the trade. A lot of times it's just a straddle strangle, sometimes a butterfly, sometimes we got a directional edge. We've done some calendar spreads, vertical spreads on those as well. And most of them we offer a couple alternatives, like some of the ones we did last time. We said, hey, here's a butterfly you could do. Or if you're not comfortable with, multi-legged long short combos, here's just a straight call or put. Sometimes we trade, the VIX, UVXY, the indexes, it's kind of cool stuff. And everything we do, Mark and I are on the absolute same page, philosophically, whatever, right? Any trade we take has to have a defined risk, and it's got to have a reward that is many multiples of the risk, right? So that disqualifies a lot of vertical spread candidates because they're the opposite, right? Their reward to risk ratio is not usually very good. But that's our approach to trading, is a high reward to risk ratio, black and white, well-defined risk. And if you follow the guidelines, right, you cannot lose more than your defined risk. And if you make a mistake, like on a butterfly, and close the longs, hold the shorts, you're naked, right? That's a big mistake. And we do have some training to help clear that up, right? But if you follow the guidelines, we use well-defined risk management, and any trade, whether it's day trade, earnings trade, unusual trade, has a high reward to risk ratio. We think those are the only trades that make sense.
And here's an example of, since we're doing this, I'm not obviously paying a whole lot of attention to my trades, but that laser that I had actually maxed out at the 40% and just sold it. So I typically would be watching something like that, and I may move my profit target up to continue the trend. But I mean, hey, it's a great trade.
But here's the nice thing, right? If you want to put some of the trades on and then, go get some coffee, walk the dog, right? If you're using OCO bracket orders, the trade will be managed. And if you want to sit in front of your screen and manage it a little more tightly, you can do that too. But even though you're day trading, you're not necessarily tied to your monitor for the entire session, right? That gets old. Bill asked, are we going to run a trading room for day trading? We will not have a daily trading room. We will, in the app where the signals come out, you can ask questions and you can dialogue with the other traders and with Mark and I, so you have a way to ask questions. And we'll do occasional sessions, every week or so, a couple of weeks. It's like, okay, a lot of questions came up, let's do a thing and answer that for the people that had the same question but didn't ask. Or maybe we're going to tweak the algorithm or add something new, right? So we'll be in touch with you. You can connect, but it's not going to be a daily trading room. Long answer, but it's important. Couple of points there. All right. When there's an unusual trade, we'll give you the exact strategy, timing, contracts, price guidelines. And an alert that there's a new trade will be sent via the app. You get a pop-up, and then you go look at the website for the details. You can expect in unusual trades about one a month, give or take, right? During the last 12 months, we've identified about 10 of those. So that's kind of the beat rate to expect.
And unusual situations. I mean, we had the coronavirus, so we put on several trades back in March, I believe.
Yeah. All right. So the Advanced Traders Club, new service. It includes all three: day trading, earnings trades, unusual situation trades. If you're in the earnings trades now, you're just going to get these added, same price, same deal, right? No change further there. So the pricing for this service, and you should be having an email hitting your inbox right now. So there's two different pricing structures. One is standalone. You don't have a current subscription to my stock and option pick service. So it's going to be $37 for a 30-day trial, right? And then after the 30-day trial, $97. Month to month, you can cancel at any time. So that's the base list pricing. $37, you sign up right now for the first 30 days, and then it's going to renew at $97 a month, month to month, cancel if you want. All right. Then if you are a current subscriber to my existing stock and option picks, then it's going to be at the same $37 for a 30-day trial, but then it'll renew at a discount at $57 after the trial, month to month. Cancel at any time. Okay, so you should have an email hitting your inbox right now that is segmented based on whether you have the picks or not. There'll be a link for you to go ahead and sign up for that if it sounds good for you. And then we are going to have a kickoff webinar training for everybody that signs up, today, tonight, early in the morning, tomorrow, right? We're going to do a training session, primarily focused on the day trades, on interpreting those signals, on the order, OCO brackets, all that kind of stuff. So got that coming. So we got through this in just over half an hour. And Joseph says, super reasonable, much appreciated. Well, thank you, Joseph. Trying to make it, this has to be worth our while. Mark and I have put a lot of work into this, in developing it, and then, maintaining it and providing support and all that stuff. We don't want it to be worth our while, but we want it to be a good value for you. And I just want to reiterate, it may not be for everybody, and that's all right. And then if you currently don't have the stock and option picks, and you go, man, that bundle pricing is pretty good, go ahead and sign up. Right? And if you don't know how to get that link, because you can sign up for the stock and option picks for $37 for a month as well. So if you don't have that link, can't find it on the website, shoot me an email, dean@followmetrades.com. We'll get you set up. Type it in here. All right. So I'm going to go ahead and stop the recording, but we'll hang out here if anybody's got any further questions.